there, my name is Anna, and I'm going to be presenting on ethical accounting at Amazon regarding tax. This is for course MBA 657, Corporate Taxation with Dr. Armstrong. So first, a little agenda about what I'm going to cover. I'll provide a little bit of history about Amazon, a major ethical issue, some key research points related to this ethical issue, and then a summary and some ethical implications. First, a little bit of history about Amazon. It started in Jeff Bezos' garage in 1994 in Seattle, Washington. Him and his wife took $10,000 out of their pocket to start this business. They started selling books via the World Wide Web, which was new and emerging at the time. In 1997, he took Amazon public. Some of their historical strengths have been aggressive technological innovation, expansion into new markets, and leading the evolution of commerce. So with these enhancements, it has developed into the $1.7 trillion e-commerce and cloud computing company that we know today. So as a retail powerhouse, all eyes are on Amazon. In May 2022, a major ethical issue presented itself to the company. This issue is that in 2018, Amazon paid $0 in federal income taxes to the U.S. on $11 billion in profits. It paid a rate of just 5% on nearly $80 billion in profits the last 4 years. So this screamed unethical to shareholders, the ones who are the owners of the corporation, and led them to develop a proposal calling for increased tax transparency by Amazon. Amazon shareholders, representing about $144 billion, voted on a proposal during an annual meeting that demanded increased transparency regarding taxes of the company. Even the Securities Exchange Commission, or the SEC, sided with these investors. This was the first time that this kind of vote ever happened in an annual shareholder meeting, and it's a big indication of the momentum for greater corporate tax and financial transparency in the business environment. So now I'll go into some of the key research points that I researched regarding this ethical issue at Amazon. First, I'll touch on some stock dividends, avoiding double taxation, and charitable contributions. Stock dividends. A stock dividend is a payment to shareholders that consists of additional shares of a company rather than cash. About 2% of all C corporations distribute a stock dividend, so it's very rare among corporations in the business environment. However, these distributions generally are tax-free. Amazon has not distributed a stock dividend to shareholders in its history of being a public company. The only dividend that they have issued is a 20-for-1 stock split in June 2022. And like I mentioned, they haven't distributed any cash dividends either. So I believe Amazon should continue to be hesitant in distributing stock dividends, mainly because this practice reduces the share price of the company and is generally an indicator of financial difficulty or instability, and just are not as attractive to some shareholders as compared to a cash dividend. However, I do think Amazon should consider the distribution of a cash dividend as a way to reward their shareholders. Shareholders might be more inclined to support and invest in companies who value their investment and reward them in the form of a cash dividend. If Amazon does decide to distribute a cash dividend, they could run into double taxation. The corporate income is taxed at the federal level at a flat 21%. However, if a company distributes a cash dividend or records a capital gain following the sale of stock, that income will be taxed again. So 2 ways companies could avoid this would be to retain corporate earnings and pay it through salaries instead of dividends, or reinvest these profits back into the business to facilitate growth. Tax avoidance is not an illegal act, but since it considers finding loopholes and essentially bending the rules of the tax system a little bit, it does present some ethical implications. So, as Amazon considers tax avoidance strategies, not just with respect to double taxation, but to all strategies, they should enhance their communication with shareholders regarding any of the tax avoidance strategies that they take. Now I will touch on charitable contributions. These are generally deductible if they are made to a qualified organization and if the contribution meets the definition of a charitable contribution. The deduction can't exceed $10,000 of taxable income, but any excess of this can be carried forward into the next 5 tax years. Amazon did have a system called Amazon Smile, in which Amazon contributed 0.05% of customer purchases to a charitable organization of the customer's choice. From 2013 to 2022, Amazon only donated $449 million through Amazon Smile, and this system was ended in 2022. So now Amazon should consider kind of where they want to make these more meaningful contributions and whether contributions made will be to eligible organizations and if they will meet the definition of a charitable contribution. So my consideration for Amazon would be to think about how to support charitable organizations that align with Amazon and customer values. So after hearing about the ethical issue that Amazon has been facing since 2022, we went through some of the considerations that Amazon professionals and executives should think about when making ethical decisions related to these 3 tax topics. In conclusion, I want to touch on one more quote with reference to that annual shareholder meeting. The Fat Coalition 2022 stated, "Investors said loud and clear that they need tax transparency to understand the financial, regulatory, and reputational risks companies may face due to blatant tax avoidance strategies." So Amazon shareholders feel like they've been left in the dark. They've gotten the impression that Amazon has been acting unethically in their tax avoidance strategies, as the rate that Amazon pays on profits is less than the amount individuals pay to the federal government. So when making all decisions regarding taxes, not just regarding the 3 research topics I touched on, Amazon must not just act in the best interest of themselves, but in the best interest of their shareholders. Negative business implications such as poor reputation and poor brand image could present themselves if Amazon does not strive to act more ethically in business taxation process, as well as be more transparent with their shareholders. And that's it. Thank you.